Hello, everyone. Thank you for being here for the first Ask Me Anything, the Discord slash live meeting I'm doing every week to answer your questions. I'm doing it in group format, and I'm really excited about the Discord group. It has a lot of people in it. We're going to start introducing more stuff. I'm really excited about it. I've been in some fun Discord groups. And I'm going to answer questions, and I have a whole list of questions. I don't even know if I'm going to be able to answer them all, but I'm going to get into it. And I guess since the first video is in Spanish. Bienvenidos todos. Gracias por venir por ese Ask Me Anything, Pregúntame de Todo en Discord y Zoom que estoy presentando en los dos, porque yo no sé cómo manejar Discord todavía. Pero la primera pregunta que tengo hoy es si mi LLC paga un servicio a otra compañía, debe obtener algún tipo de formulario W-8BEN para no retener impuestos. ¿Cuándo no es necesario obtener W-8BEN o similar al pagar un servicio de consultoría a otra empresa? Eso es una buena pregunta. Y hay mucha confusión sobre esa pregunta en el Internet. Ahora, la respuesta es sencilla. La único tipo de transacciones que tenemos que reportar al IRS y retener impuestos son transacciones de FIRPTA, de FDAP, FDAP Income. Si usted está pagando FDAP Income conectado con un negocio que no está conectado con un negocio de Estados Unidos, es decir, que no está pagando a una persona de Estados Unidos, no tiene que retener impuestos. Y voy a explicarlo sencillo. Si usted está pagando, si usted es un negocio en Estados Unidos y está pagando dividendos o intereses o quizás rent para un apartamento o royalties, oficialmente debe retener. Si usted es un extranjero y usted no tiene, no está pagando impuestos, no está haciendo formularios como un residente de Estados Unidos, no tiene que retener impuestos en Estados Unidos ni recibir o pedir los formularios. Y la mayoría de mis clientes y gente que estoy hablando son extranjeros que tienen compañías en Estados Unidos. Y cuando tiene ese tipo de estructura, no tiene que mandar los 1099 ni retener impuestos ni hacer nada de eso. Las instancias más comunes cuando una persona tiene que retener impuestos a pagos a extranjeros es cuando tiene una corporación, porque una corporación es una persona que paga impuestos en Estados Unidos, es una US taxpayer, y una corporación que está pagando dividendos a los dueños quienes son extranjeros de la corporación. En ese ejemplo, la corporación normalmente tiene que retener impuestos sobre ese tipo de dividendos. Y reportamos eso en formularios 1042. Pero para todos los otros tipos de pagos, nunca yo estoy reteniendo impuestos a pagos a mis proveedores y a la gente quien está trabajando conmigo. Nunca estoy reteniendo impuestos en eso. Entonces, y yo estoy pagando gente para mucho tipo de servicios. Yo voy a compartir mi pantalla aquí también. Y no tengo que retener impuestos. Solo si yo estoy pagando un extranjero para dividendos o intereses o ese tipo de cosas. ¿Ok? Bueno, aquí estoy. Déjame hacerlo así. No, solo yo. Bueno. Ok. Yo estoy dejando eso aquí. Eso es, yo creo que eso es, ¿no? Si mi LLC paga un servicio a otra compañía, no tiene, si usted es un extranjero, si usted vive en, por ejemplo, Costa Rica y pagas para servicios a cualquier persona, nunca tiene que retener impuestos. Si usted es un extranjero que tiene un LLC, nunca tiene que retener impuestos al respecto de Estados Unidos. Nunca, ¿ok? Yo creo que yo contesté esto y creo que eso está claro. Si pagamos un proveedor que envíe nuestra consultoría, no. Si usted es un extranjero y tiene una LLC en Estados Unidos, no tiene que tampoco pedir el W-9 W9 ni el W8BEN. Y eso no es necesario para los extranjeros que tienen LLCs. Todas estas cosas más importantes para las corporaciones en Estados Unidos y los residentes de Estados Unidos. The next question I have here, a U.S. company is paying a foreign LLC partnership for services performed outside the United States. What forms ensure the U.S. company doesn't have to withhold taxes? Perfect. This is the same question. When does a U.S. company have to withhold taxes on payments to foreign service providers? That's a great question. So we are going to look at the same little excerpt, the same page. I'm going to move myself over here. And this is a little confusing too. And this is just the IRS website. I could go into more detail. I'm trying to make it as easy as possible. Fixed determinable annual periodic income, FDAP income, is all income except these types of things. So the tax treatment of FDAP income, which is not effectively connected income, is taxed subject to a 30% withholding tax. So this is when a U.S. business is paying a foreign business FDAP income. And FDAP income, and this is great, I'm answering the question in English, and I just answered it in Spanish. FDAP income is compensation for personal services, and this is really for when you're paying a foreign person who's physically in the U.S. providing services. I need to turn off these beeps because people are coming in and out of this group. It's driving me nuts. Cut that out. So when a U.S. company is paying a foreign person who's physically in the U.S. doing the work, you should be withholding taxes on that. And the rest of it doesn't matter where you are. So this is going to be dividends, interest, alimony, royalties, and some good examples. When a corporation has foreign owners and it pays dividends, it has to withhold taxes on the dividends. There are treaty rates. For example, Mexicans and Canadians, it's only a 5% withholding rate. The standard rate is 30%. And then other countries have different rates. You have to check the U.S. tax treaties. There's a lot of treaties. Interest is mostly automated and done by the banks, and portfolio interest isn't actually subject to withholding. This is other interest on, for example, loans, like formal loans. This is the interest it's referring to, and these are the interest payments, not accrued interest. This is a good one. And this is the most common by far. It actually happened to me too. Real property income, such as rents. So if you are renting, if you're in Miami and this is for a person, I'm digressing a little bit from the original question, but if you're a person in Miami and your landlord is a foreign person, you're paying directly to this person, unless they give you a W-8 ECI, form W-8 ECI, unless they give you a form W-8 ECI, technically you are supposed to be withholding 30% on your rental payments to your landlord, unless you get this form. I had a landlord who's in the same situation, and I actually requested the form, and I was really adamant about it, and they didn't do it, and I kept paying rent, and I eventually gave up, and nothing happened. But if for example, the IRS audited my landlord and he hadn't been paying his taxes, I would be on the hook for those taxes. And I explained it, and it is what it is. But the form W-8 ECI is basically saying that you have effectively connected income. And if you have a rental property, you have effectively connected income with the U.S. trade or business. And the form is quite easy to complete. It's a one-page form. It's really just the information about the beneficial owner and some addresses and tax numbers, and then certifying that you have a U.S. business. If you sign up for a Walmart store, you have to complete this W-8 ECI if you're a foreign person. Amazon will accept the W-8 BEN. And I don't like the W-8 ECI for an e-com store because you're telling the IRS that you have effectively connected income and you should be paying taxes on this. So, you know, I don't like it. These forms are, again, W-8s, W-9s, they're all internal forms. However, if the person who is paying you gets audited, the IRS could ask for it. But generally, these aren't actually sent to the IRS. Okay, so let's go back to the next question because I think I answered that question. And I think just streaming and recording everywhere is working fine. The next question, how to complete Form 5472 for a foreign-owned single-member LLC? Okay. Here's how you complete form 5472 for a foreign owned single member LLC. And I don't even have to do too much crazy stuff here. I'm going to do a quick overview. First, you get form 1120, and it's a pro forma form 1120. I'll get myself out the way. So you get IRS form 1120. You have to stamp at the top foreign owned USDE. You just have to fill out the top section. And then attached to this form, you get form 5472. You get you look at form, okay, 5472. Let me get this. 5472. And then you complete this form, and then you attach it to the back of the form 1120. You put the stamp at the top, you fill out the basic information, you sign it, you leave the rest of this form blank. I mean, the rest of the form, the other pages. And then you fill out this form, the form 5472. You report your related party transactions. Put your tax year, name of your company, you fill out this information, you fill out who's the 25% foreign shareholder, and it's a foreign owned single member LLC, so there's one owner. You put that owner here. Oops, not this page. You go to the second page, and on here you'll see the address of the related party, and this is the person who had the transactions. And let's say you paid yourself. You put down here how much you paid yourself during the year, $500, and then you put it down here, $500. And that's how much you paid yourself. You have to fill this out, and then you have to fill out the last page, and you attach it all, and you fax it to the IRS. Easy breezy. If you want all the details, you can obviously go to my course on the website, and we'll review it for you when it's done. The penalty is $25,000. I am actively working to abate penalties for clients. So, they do assess the penalties, and I am, not my clients, they're new clients because they got the penalty. So this happens. People get penalties. Do it the right way. Conceptually, it's easy. There's a lot of nuance, and it's just annoying. So if you have a business and if you have an LLC in the U.S., whether you're doing real estate, whether you just own it and you open it and you haven't used it, you probably have to file the form, and you should file it right, and it's due April 15th. And you should probably call this, basically this summary of this section is how to file 5472 for a foreign owned single member LLC in 2 minutes. It's pretty easy. So I'm gonna keep that easy so we can keep it moving. Any info about when to do an Fbar report? And that's a great question. Who has to file an Fbar form? I know, real genius research here. Not H&R Block, I want the IRS. And the IRS. So cool. So on the IRS website, I'm pretty sure a foreign-owned single-member LLC is classified as a U.S. person for purposes of filing Fbars, and we're going to read that right here. So who must file? A U.S. person, including a citizen, resident, corporation, partnership, limited liability company, trust, and estate must file an Fbar to report these two things: a financial interest and a signature authority over at least one financial account outside the United States if the aggregate value of all financial accounts exceeded $10,000 at any time during the year. The most common instance when this is needed is when you sell your house and you put money in the account and then you transfer it and pay off your mortgage. One example. But for LLCs, I just haven't expected many LLC owner clients of mine to be having foreign bank accounts with their LLCs. I just didn't think it was something people needed when they have U.S. accounts. But if you do have one and it has a balance, you technically have to file an Fbar. So that kind of answers that question, right? And then the follow-up question is, how do you file an Fbar, which is Form 114? You go to this, the Financial Crimes, FinCEN.gov, Financial Crimes Enforcement Network. So which Fbar filer are you? I think it's an individual filer, and you just go through and you can file it online on the system. There's an echo. Sorry, Eddie. I have to, there's probably an echo because you're on Zoom and Discord together. Close Discord. Yeah. Okay, cool. So I'm going to get to those questions. I want to do the ones that Danny did first. So that's how you file. So that's how you would file an FR. Again, I'm oversimplifying everything so I can answer all the questions and blaze through them. And I like just talking. I'm glad you guys are here. So I did this. An FR would be, so an FR is mandatory if you have an LLC and you have the LLC has a bank account or a signature authority over a bank account outside of the US that had $10,000 in it at any point during the year or an aggregate value, which I said in the video. That's the summary. Okay, next. For a U.S. citizen living overseas, could 112,000 or 224,000 married foreign income exemption be applied to avoid paying tax on a Roth conversion? That is a great question. So the foreign earned income exclusion is an exclusion that allows U.S. citizens who are living and working abroad outside of the U.S. and who are either qualify for the physical presence test or the bona fide residence test to be to qualify to file for the exclusion. So it's the foreign EIG earned income exclusion, and I'm for a Roth conversion. And the question is, when you have a retirement account, it's subject to tax. If you don't have income in a year, you can convert your traditional retirement account to a Roth retirement account. This conversion is subject to tax, and the reason you do it is because maybe you have a low income year, you have some losses, or maybe you can exclude it from your with the foreign income exclusion, which is what this question asks. And I'm actually probably going to cite someone else's website because I'm sure someone wrote an article about it. The Balance has one. Contribute. No. Yeah, the Online Tax Man is good guys in New York. So yeah, he has a cool one. He has a cool article, and I've referenced this before actually. How to do it. If you qualify, you can convert it. Equal less than the surplus. Surplus unused standard deduction. Yeah, so he says, no, it doesn't count as earned income. And I think that's really the question. The issue, and where I have some hesitation, is that the traditional IRA conversions are usually made out of earned income. So it is technically past earned income. And when you're converting it, does the category of income change? And I'm going to do a little bit more research here instead of just referencing someone else's article that he's just saying you can basically convert 24,000 a year if you're married tax-free because you're just using your standard deduction, which is a great point. But that doesn't address, can you actually exclude the conversion as earned income? It doesn't sound like it's earned income, but I'm trying to make that argument. What is earned income for the IRS? Let's look at some tax codes here. Perfect. What is considered earned income? A brand new one. To claim what is considered earned income for the foreign earned income exclusion for the IRS. Great. So let's just check the IRS website again. It's the best way to do it. And I'll as I read this, I'm gonna talk a little bit more. So a traditional IRA is like a regular retirement account. When you have a job, you contribute your $18,000 a year, and this contribution is a deduction from your income tax this year. But when you take the money out of your retirement account when you retire, you pay tax on it. A Roth account, you don't get a deduction for now, but you don't pay taxes on the principal or any of the gains you take out when you retire. So the Roth is amazing because you grow so much more tax-free. You, and then there's the math, obviously, like if you're paying a lot of taxes, maybe it makes more sense to do a deduction this year if you're paying 36% because you're going to have 36% more tax, 37% more taxes. And if you factor in state taxes, you have 37% plus state taxes more to grow over that time and then deal with the taxes later. So it's a good argument, but in general, once you have it in the traditional, you can convert it to a Roth by paying taxes on it on a year where you have no income. So let's look at this. Maximum earned income exclusion is 112,000. Great. Amounts paid, amounts received. I'm going to say that I don't think you can, but the article by Online Taxman is really good because you can, if you have no income, you can convert some. Just excluding it is going to be a little bit aggressive. Let's actually look at the form 2555. Oh, amazing. Federico, nice to see you, man. Awesome. Thanks for showing up. This is fun. Okay, so I'm not going to spend too much time on this because it doesn't affect most people. I just want to look at the form because they have the different categories of income at the end of the form. And that's how we're going to kind of wrap up this thought here. Okay. All tax, enter the amount from line 26. Is there, okay, here you go. 2021 foreign earned income, wages, business, partnership, non-cash, lodging, meals, allowances, reimbursements, other foreign earned income. It would be a stretch. You can put it on there and the IRS probably wouldn't audit you for it. They could, but it doesn't clearly say it anywhere that we've looked that you can't do it. So if you want to take an aggressive position, yes. Let's exclude your conversion. And I think I can do it in the software. But it's probably not the right answer. And that's as far as I'm going to get on this question. Okay, that's a good question though. Next question. Our business is as agents selling a principal. We're selling Microsoft licenses. According to IFRS, this is revenue. The same accounting approach. The license is Microsoft, the client, the trade is my first person ownership. Okay, so I think I saw this. Number one, possible standard of authority based on revenue need to present year-end statements. Okay, so technical asset was setting a financial system. Okay. So how to calculate how much tax you owe to the IRS, how to protect yourself from the IRS, and what happens if you get an IRS audit. I'm going to answer all of these questions. And I'm just going to, because I think that'll explain it. So in the U.S., if you have a U.S. trade or business, a corporation, or you live in the U.S. or you're a citizen, then you have to pay tax on your worldwide income. Basically, if you make money doing something, you have to pay tax on it. It doesn't matter what you're doing. If you're buying and selling stuff, if you're brokering stuff, you're getting commissions, as long as you coming out at the end of the day with more money or fair market value equivalents of things, like if you get paid in houses or food or whatever, technically the value of what you receive is the income for the year that you should be paying tax on. To set up financial recording, most of the IRS, whenever they do an audit, they look at the bank statements, they look at the transactions, and they heavily analyze that. Everything that comes in to your account, the IRS considers income. Everything that leaves your account, you have to justify that it's an expense and not a distribution. So the onus is on you to justify your expenses and then explain when money that comes in is not income. That's how the audits work. It's pretty simple. You know, you have to get all your accounts and they look at every transaction. So what I would recommend is that you have a very simplified and clear banking system and good documentation, especially for the funds that leave your account. You don't need to document funds that come into your account as much because the IRS would default call it income. If it's coming into your account and it's not income, document that. So I use QuickBooks, and that's what we recommend for most of our clients. It's the biggest company. It's the easiest. There's other companies that are easier. There's other companies that are cheaper. I just said it was easiest, but we like QuickBooks. I like the reporting, and I just like it, so I use QuickBooks, and it basically connects to your bank, pulls in the transactions, and you just say what the transaction was. So if you start a business in the U.S. and you are a U.S. taxpayer, it's important to have your proper accounts and use accounts in very clear transactions and don't commingle. Don't use personal expenses on a business account. That's very bad. And also to track and organize those expenses throughout the year. And if you do get an audit, it's important to respond to the IRS timely and answer all their questions and provide all the documentation you need to substantiate the position that you took on the original tax filings. Now, for all of my clients and people watching who are foreign and not from the U.S., you don't pay U.S. taxes, you have an LLC and nothing else, the question is more of confirming, if the IRS calls, we're more focused on confirming that you do not have a U.S. trade or business. Because once that is proved, it doesn't matter how much money you make because it's not subject to tax. So those are the two levels of that question. It doesn't really matter what you're doing. If you're a taxpayer, the money you make minus your expenses, what you pay tax on, and you file it affirmatively and the IRS can ask for proof. And that's like the filing for the year. And then if you're not a U.S. person, it's really just confirming that you're not engaging in U.S. trade or business. So that's kind of that question there. That's that one. I think that's a good question. Possible scenario if an authority has a tax levy. Oh, that's the same one. Here we go. There's only two more here, and then I'm getting to the questions in the chat. Thanks for waiting, everyone. Blue cheese is here. When my LLC, foreign single member LLC, disregarded entity, makes a payment to a provider for consultant. Oh yeah, we already did this one. Oh, we did it in Spanish though, right? Okay. This depends on your status. Who has to request a W-9 or WABEN, and when do you need to withhold taxes? That's the question. We're going to start first with the foreign individual with an LLC, a foreign-owned single-member LLC. Danny in Costa Rica, if he has an LLC, he doesn't have to request W-9s or W-8s or ever withhold U.S. taxes. He's not a U.S. taxpayer. He doesn't do business in the U.S., and it's very easy for that perspective. I'm over here. So that's easy. If you are a U.S. person, then you do have to request W-9s and W-8s on payments to contractors. You need to get tax identification because technically you should be filing forms 1099. You only need to withhold taxes if you're paying out royalties, dividends, like rental income or services for foreign entities that are being performed in the U.S. If you bring over, if Danny comes to my house to install a router, technically I should withhold taxes on that payment. So those are the two big separators there, and it makes a big difference. Last question I have on here. Con una empresa abierta, Etsy, no se permite cambio de datos de país fiscal, como declarar gracias de una LLC. Okay. Let's stop screen sharing for a minute. Si usted está vendiendo por Etsy o por Amazon y está registrado como un extranjero, pero quiere cambiar por su LLC, tiene que hablar con ellos directamente para ver si Etsy o si, Walmart, Amazon, eBay, probablemente más similar que Etsy. Tiene que hablar con ellos para ver si ellos pueden cambiar su estatus, su tipo de cuenta, porque es diferente de cada compañía. Pero oficialmente es lo mismo, porque en LLC no existe para propósito de impuestos. Entonces, si ellos le están pagando y entregando su dinero y puede entregarlo a su cuenta de su LLC, creo que está bien, porque si ellos no están reteniendo impuestos y ellos están mandando a la correcta cuenta, puede dejarlo como es, como un extranjero, y no va a tener un problema. Yo sé que en Etsy y eBay a veces ellos están reteniendo impuestos y también quiere ser al día con impuestos de venta sobre la venta. Pero ellos están, todavía ellos están en esas compañías, esos intermediarios, ellos están pagando los impuestos de su parte. Entonces, lo más importante es que está recibiendo su dinero que debe recibir, y si ellos están reteniendo, eso es diferente pregunta. Yo voy a contestar eso ya en inglés, o no, en español. Ok, yo creo que la mayoría de ustedes habla español. Bueno, si usted está recibiendo pagos y la gente quien le está pagando está reteniendo impuestos, tiene que revisar si hay una opción para usar un tax treaty o también si puede cambiar el estatus de su compañía oficialmente para parar ese tipo de retención. Porque si solo está entregando servicios, oficialmente ellos no deben retener. Pero si está vendiendo libros por Amazon, Amazon siempre lo va a retener porque Amazon tiene, esos son royalties. No sé la palabra en español, pero esos son royalties y eso es sujeto a retenciones, a lo que hemos visto antes de FDAP, es FDAP Income. Entonces, eso es lo más común. Si usted tiene un canal de YouTube, si usted está recibiendo pagos de Amazon solo para royalties o quizás por Etsy para royalties, ellos pueden retener. Una manera para cambiar o para parar ese tipo de retenciones es para poner un miembro a su LLC para que este es un multi-member LLC y oficialmente un LLC con más de un miembro es un US taxpayer y puede entregar legalmente el W9 y después tenemos que averiguar cómo vamos a reportar todo eso en el 1065 que tenemos que reportar anualmente, pero va a tener todo su dinero al inicio y puede seguir operando con todos sus flujos. Entonces, eso es. And just to sum that up in English, in case anyone here is only speaking English, if they're withholding, if you're a foreign person and the person paying you, whether it's Etsy or eBay or whatever, are withholding taxes, there are ways that we can change the structure of your company and change the tax form that you give them, a la a W-9 instead of a W-8, which will stop them from withholding taxes. They will report the payments to the IRS, but they won't withhold taxes. And we will report the payments as income on your tax return and the money out as expenses. Okay, amazing. I'm just blowing through these questions because I have a pasar una hora. Okay, let me see. Here we go, chat. Okay, hello, Eddie. Okay, so they're not holding taxes. You only open the LLC and put your shop there. Then that's great. If they're not withholding taxes, si no están reteniendo impuestos, you don't have a problem. I think you're fine. It's as long as you are, what's the word? We're getting all your money and able to sell to everyone and there's no restrictions and using your U.S. account, then I don't see a problem. Because officially, when you have a single member LLC, you are the taxpayer. The LLC does not exist for tax purposes. So therefore, you know, if they should have your personal tax data down because it is a disregarded entity. For some accounts in Amazon, for example, you want to add a second member so that the name of your LLC appears as the customer instead of your name personally, especially if you have a big Amazon store. So I've done that often. So, oh, I missed that. I'm missing the questions. Okay. Federico, I hope you're doing well, my friend. I don't know. I guess we're gonna do this in English. We have the LLC. You're about to start the Amazon process. Start the process to have your products on Amazon. That's amazing. So, what are common mistakes and unforced errors? Thanks. That's a great question because I work with a lot of clients who are on Amazon, and I'm going to just riff on this for a minute because I think it's the last question I have here. If you have an Amazon store, there's steps. The first step I would do is make sure that you have the company and the store completely set up and open and to receive money and have it all set up. Because if you're a foreign-owned single-member LLC and you get it registered and you can sell stuff and you got it organized and it's going, then you're good and you can sell to Americans. Amazon will take care of the sales taxes in almost every state. I have to check what states they don't do it in. And honestly, it comes down to operations. Like, what kind of operation are you doing? If you're selling on Amazon, it's harder to do, from what I've seen. Drop shipping isn't as easy on Amazon. Most of my clients are doing private label on Amazon. There was a big push a year and a half ago, 2 years ago, for people to basically drop ship on Amazon and drop ship on Walmart. I drop shipped on Walmart from Amazon. I worked with a client, he introduced me to it, and we were selling Amazon products on Walmart, and we made money for a couple months, but eventually Walmart shut us down. Amazon shuts these down too. If you're drop shipping from us, especially from other US companies, it's very likely you get shut down. What Amazon wants to work with, and the same as Walmart, they want to work with actual products, the people who are making the products, so that they can get the best cost to the clients, and so that there's also less middlemen and happier customers. When you're using drop shippers, the shipping's longer, and it just takes longer. Amazon FBA is a big investment, but if you know people are going to buy your products, it's a good option, because the next day shipping is huge. When I'm buying stuff, I almost only pick stuff that can get it to me next day or the day after. I'm currently in France right now, so I haven't been using Amazon, and believe me, I've saved a ton of money this month for not being in the US without having Amazon to buy stuff from. But that's a big deal. The convenience of getting something the next day or the day after is huge, and it really does increase sales. And most of my clients at Amazon, I mean, there are clients doing drop shipping, but again, they're using fulfillment centers. They have it all set up. So in terms of like tips, my tips are to get it set up financially so you can pay for everything and you're getting all your money. Tip number 2 is make sure your fulfillment is locked down, because if people aren't getting their products, then you're not going to have happy clients and you're not going to get good reviews, and Amazon can shut you down. So you need to have good fulfillment, and there's a lot of fulfillment centers out there that you can work with, Amazon being one of them. But the requirements to work with Amazon is that you have to send them a lot of product for it to be Amazon Prime. You can have fulfillment centers that'll still fulfill it quickly, but to have that Prime check where it's a Prime, it's fulfilled by Amazon, is pretty amazing, and it will increase your sales and people are seeing your products. So you just have to send them 20,000 units before you make any sales. So there's a huge upfront cost and commitment to that. And if you don't sell it, then I think it gets kind of stuck there. So usually people are going to start with stuff and eventually invest more and more and then get more and more into it. So you'll start with, oh, hey, I'll get that next. So you'll start with a, like maybe you do start with drop shipping. You start selling brooms and you see the brooms are working good, you're getting reviews, then you talk to the supplier and you get them to make them a little bit different and change the packaging, and you're sending more and more, you're getting good reviews, and then you buy a bunch and you send to Amazon. So it's just constantly reinvesting and finding products that work and then reinvest. So now that I'm talking about it, I'm gonna jump into a little more, because this is a lot of fun for me. Again, speculating just based on my clients and their experiences, what I've learned from them. Finding a good product. You said, I mean, for you, Federico, you said you have your own product, but finding a good product is super important. Product that people like and will review, and that's unique if you can, or better in some way, and then marketing it that way. Obviously, you need good marketing. Obviously, you need good SEO, local on Amazon. Obviously, you need good fulfillment. All of that stuff is super important. And then as you scale and you do fulfilled by Amazon, it gets even better. And then it's just scaling, and it's finding other providers and finding different ways to do it, getting better reviews, and eventually taking it off Amazon and selling on your own website, so you make better margins. And using influencers is very popular, like brand influencers. There's just so many things that you can do with the Amazon stores. Assuming you have a good product, that's really the first step. I would just say, just keep moving, keep trying stuff, and keep pushing through it. And when you have specific problems, send me an email. So that's my advice, Federico. Let me know how that goes. So I'm working on you sell baby shoes. Amazing. Yeah. So I would honestly, if you're selling baby shoes, I would register on, I would do it on Etsy too. Because if you register on I would try all of it, because if you can sell on your own website and go to like moms groups, like I have a client who sells baby carriages, and he sells like sleeper things, and that's his only product, and he makes a lot of money, does really well. great client. And he does Google SEO. So there's a lot of different ways that you can advertise this and push forward. Amazon's a great option, but Amazon is really like the option to scale. There's a lot of ways to make a lot of money and sell a lot of products and the other options, but Amazon, when you get on there, is when you're selling a whole lot and you have to have your distribution really lined up because it's such an efficient marketplace. I like example, if I can buy your shoes are a little bit cooler, but I get the other ones tomorrow and it's fulfilled by Amazon, I know I'm going to have no problems. I'm getting it tomorrow. Whereas otherwise I have to trust someone else to ship it. It could come in 3 weeks. I'll forget about it. I'm an American consumer, and that's good feedback because that's literally, that's that. Okay, so I have another, okay, so that's that. I talk about it more again later. That's really, I'm excited to see how that goes, Federico. Okay, so Cuenca, escape room. If I'm not able to change the Etsy information, I'm selling digital products, there's any option to put the sales into an LLC. I receive my payments in PayPal Europe. You're selling digital products on Etsy and getting paid into PayPal Europe. I mean, this is very platform specific. So honestly, I'm not sure about the answer of this one because I've never sold on Etsy. You contact their Etsy internal team and you contact them and ask them what you can do. Ask them what the options are. I do have a client who worked on Etsy and she had to I think she made a separate account and kind of started it over, the business, and asked for reviews from the existing clients. I think that's what she did, but I'm not, but really she had to ask. So you have to ask support to see what you can do, but there's always, you might have to set up a new account and list the list the products again. You know, it works. You have the fulfillment, you have all this stuff. So, and then maybe do that. You might have to set up a new account and get a US PayPal and get a US bank account and do it that way so you don't have to deal with all the conversions. Because PayPal Europe is tough. I think they, you guys get a rough rate when converting to Europe. Okay, so I got the same question from Leo a couple of times. Yeah, you asked them, they told you have to open a new shop. Yeah, you probably have to open a new shop. And that happens with my Amazon clients as well. I also often have, I was talking to, I had a consult last week, and these guys from the UK, they have an Amazon store in the UK, and they're doing well, but they want to sell in the US, and they've only been selling at Amazon for a couple months, 3 months, and they can sell in the US and the UK, but they were going to change their residency and they wanted more flexibility. And I said, guys, open a separate Amazon store from the US because you just started first and you know the product's good. And second, is going to have you more options in the future. If one store gets shut down, the other one's going to work. You know, if you'll have more options going forward. So Cuenca, if you open the US account, I would definitely open it like right away, the US account, and try and use it and set it up and see how it works. Keep selling in Europe, but then start selling in the US and start growing that, and eventually you can phase out or the Europe one, as long as the US one's getting all the sales. So it's really just, you just push through with the different account. So I have another long question here. Here's my question. Multi-member LLC taxes a partnership. All members are non-US persons. The LLC buys physical products on US and reselling Amazon FBA. Should the members pay tax in the US? After the tax, doesn't matter if all members are living in a country that has tax due to the US. Should members file 1048 NR protected return? Great question. So I'm going to go on another rant for a completely separate section here. So if more than one foreign person owns a US LLC, it's a foreign-owned multi-member LLC. This type of entity has to file a Form 1065 with the IRS each year, which is a partnership tax return. And I have a long video about the tax implications of this, but in summary, in short, if a US partnership, if a foreign person, a non-resident, receives a K-1 from a US partnership that has no effectively connected income with the US trade or business, that foreign person does not have to pay tax on that K-1. So, which is to say, as long as you have no US trade or business, which I've talked about in many other videos, if you don't have an office, if you don't have employees, if you don't have a warehouse, locations, you don't provide services in the U.S., then you don't have to pay taxes. You do have to file the 1065. And if you're making a lot of money, if there's a large profits, sure, I'd file the 1040 NR. However, if it's not absolutely necessary, and I really don't do it for a lot of my clients, just because I do it for the clients that make, over a couple $100,000 as if they ask for it. But in general, it's not subject to tax anyway. So the argument isn't like, did you report or not report? The argument's more, is there a U.S. trade or business in the partnership? So that gets us to the second point. The LLC buys physical products in the U.S. and resells them on Amazon FBA US. So is that a U.S. trade or business? And we're going to look into circumstantial evidence for this one. If you don't have a warehouse in the company's name, you can use a third-party fulfillment center, because that's exactly what Amazon FBA is. So let's say you use a third-party fulfillment center and you send it to Amazon, which is another third-party fulfillment center. I do not consider that a U.S. trade or business. I don't believe the IRS considers it a U.S. trade or business, and Amazon certainly doesn't consider it a U.S. trade or business either. If the IRS wanted to consider this a U.S. trade or business, Amazon will be required to withhold taxes. And I have other videos with Peter Paulson on my channel. He's a really smart guy. I love doing videos with him. They go over this in great detail, kind of more common sense wise, logically, why the IRS isn't imposing income taxes on every single person all over the world, because it's just a little insane and it's impossible to facilitate. And the IRS and the U.S. government doesn't want other countries doing that to us as well. Imagine if every time I bought something and every time I sold something to a person in Panama, I had to pay income taxes in Panama. That does not encourage free trade. The U.S. is all about encouraging free trade, all about globalization, and all about supporting U.S. Customers. If the U.S. government imposed income taxes on every foreign-owned company that sells products on Amazon FBA, that would increase the price of products for everyone, and it would create a huge legislative burden, and it just wouldn't make sense for anyone. So that, along with the interpretation of the actual written tax code of what is U.S. trade or business, let's jump into that for a second. The work is being done remotely by the partners who don't live in the U.S., so they don't have to pay tax in the U.S. And then also, the company doesn't have control of the goods, and Amazon is not a dependent agent. So Amazon is obviously doing this for hundreds of thousands of companies, so they are not a dependent agent working only for you. They're in their ordinary course of business. So you're consulting with someone who's not making decisions on behalf of your company, who's literally a dependent agent, and that doesn't constitute a U.S. trade or business. So all of those things put together share that, and that's how it is still. I imagine at some point the IRS might challenge it or hopefully clarify it a little bit, because there's no commentary on it. There's been no publications or anything from the IRS that kind of clarify this. And to get to the result of the practical implications of a foreign partner of a U.S. partnership not having to pay tax, I had to go into publication 519. And actually, let's go into that right now, because that's a great thing that I like to reference. And hopefully we can find it quickly. Let's go to publication 519, since I think this might still be the last question. U.S. Tax Guide for Aliens. So we're going to go into the HTML. We're going to look for, cool. Okay, resident and non-resident aliens taxed in different ways. We know that non-resident aliens are taxed based on the source of their income, whether or not their income is effectively connected with U.S. trade or business. The following discussion will help you determine that. Here you go. So, non-resident alien income that is subject to U.S. tax must be divided, that is subject to U.S. tax income. Yeah. A non-resident alien's income that is subject to U.S. income tax must be divided into two categories: income that is effectively connected and not effectively connected. So, and that's how we get to the difference is the effectively connected income. After allowable deductions is taxed at graduated rates, right? Income that is not effectively connected is taxed at a flat 30% rate, but that's only for FDAP income, and that's only income like dividends, rents, royalties, right? Okay, so that's that. That's the difference there. So effectively connected with U.S. trade or business. Generally, you must be engaged in a trade or business. Whether you're engaged in trade or business depends on the nature of your activities. Personal services, other trade or business activities, students, trainees. Look at partnerships. If you are a member of a partnership that in a year is engaged in a trade or business in the United States, you're considered engaged in trade or business in the United States. Interesting. Trading stocks this is fun. If your only U.S. activity is trading in stocks through a U.S. broker, you are not engaged in trade or business, and this isn't actually subject to tax either. It's pretty cool. Oh, I just went over this on another call today about scholarships. Okay, effectively connected income. I'm trying to find this actual thing about the K-1s. Let's see. I really want to find it now, guys. Ooh, Danny's back. Admit. Okay, well, I can't find. Okay, I won't give up. Oh, here you go. Exceptions. Okay, perfect. Non-resident aliens. I found it. Non-resident aliens who are required to file income tax returns should use 1040 NR. If you are any of the following, you must file a return. A non-resident alien engaged in trade or business. You must file even if you did not, your income didn't come from the U.S. business and it's exempt from tax. You must file, okay, great. A non-resident alien not engaged in trade or business in the United States with U.S. income on which tax liability was not satisfied by the withholding of the tax at source. So if you have royalty income, you have to pick it up. You must also file if you want to claim a refund. Okay, whatever. Exceptions. You do not need to file a 1040 NR if you meet the following conditions. You were a partner in a U.S. partnership that was not engaged in a U.S. trade or business in the United States during 2021, and your Schedule K-1 includes only income from U.S. sources that is not effectively connected with U.S. trade or business. So technically, you don't have to file a tax return. I'm so happy I found that. You see the smile? I'm so happy. Let's see if I have any other comments on here, because I do have, I don't know how long I have in here on this meeting. Oh my gosh, hold on. Blue cheese, okay. So, give me a second, guys. I just did an hour-long interview before this meeting too about the new president in Colombia and what that means for Colombians with the president of a newspaper down there that was a client of mine. That's going to be on the YouTube channel. It's in English. I'm going to do it again with him in Spanish. I'd probably watch the English one. We're both native English speakers, but we speak Spanish. Okay, so next question, that's coming up. I want to set up an LLC, bank account and everything for your consulting to clients in LATAM. Beautiful. You have freelancers who live in Colombia and Mexico. Your clients are in Asia and will pay your U.S. account. What's the best way? And can we assist with bank accounts? With your visit to France, can we expect something new in the EU soon? Yeah, let me know about that. I'm in France right now. I was just in Spain for a month. I'm going to go to Switzerland next and then Italy for, my wife says the kids got to go back to school. I'm hoping to stay out forever. But yeah, let me know if you guys are looking for anything specific in Europe. If you need like companies in Spain, I'm a U.S. tax expert, so I'm not going to be doing too much crazy stuff out here. But you know, let me know if you're looking for anything in specific. So to answer the question, I'm trying to think of a good headline for this one. Using an LLC for an international consulting business based in LATAM and Asia is an amazing idea. Everything you wrote makes sense. So if you, and I'm just going to lay out this example. If I live in Colombia and I'm a consultant and people pay me for advice, doesn't matter where my clients are. Let's assume they're in Japan, Argentina, Canada, the U.S., and South Korea. And I get clients that each pay me 30 grand a month. I have a great business and I do awesome consulting. And I pay contractors in Africa, you know, the UK, USA, contractors, and Mexico. I would use a US LLC to run this whole business. First of all, I get everything in US dollars. And second of all, you can open multi-currency accounts as well if that's beneficial for you, using things like TransferWise or AirWallex or any of those other EMIs, which are electronic money intermediaries. And basically, you set up the LLC, you set up the bank accounts, you set up your agreements, and then you set up any other ancillary accounts or financial tools that you need so that you're paying the least fees possible and you're getting your money as quickly as possible. And you're also making it as easy as possible for your clients to pay you, which are all super important things. A lot of that is a little bit of that is trial and error, and a lot of that is what we provide for our clients. Basically, working with you on this. If something comes up, we fix it for you. Or fix it with you. A lot of times, it's a bank account. You have to be there too when we set it up, and just finding solutions for problems. But in general, yes, it's an amazing idea. I talked to a guy today who is doing he does tourism in Argentina, and he gets paid by people in the U.S. And I said, yeah, of course, use a PayPal account, use U.S. dollar accounts, and get them to wire you and pay you with credit cards instead of bringing you cash and paying you in Argentina, where you're losing 30% of the value of your money when you get it. Not only taxes, but the conversions from dollars to pesos is crazy. So 1,000% I would use use that. So if you want to talk about more complicated things, like the question is, when should I have there's another question. When should I have a corporate blocker, an offshore company, be the owner of my LLC? That's a great question. And to answer that question is that depends on your local tax laws. The corporate blocker, if let's say, for example, use Cayman Islands. If I'm let's say, again, go back to Colombia, if I love Colombia, let's say I'm Panamanian. If I'm Panamanian and I want to use an LLC, but Panama has a law that any money that I earn from my LLC I pay tax on, I could explore the option of using a corporate blocker, because what a corporate blocker is a corporation that has a 0% tax rate. So if you have a Cayman Islands company that owns an LLC, all of the profits from the LLC never pay tax. The LLC doesn't pay taxes unless you make some kind of elections. The LLC profits flow to the Cayman Islands Corp and are subject to tax there. The tax rate is 0%. There's things that stop Americans from doing this, and there's things that stop other countries from allowing this, but there's still some jurisdictions, like potentially Colombia or Costa Rica or whatever. I don't know. I mean, it depends on what country you're from and if it's even necessary. There's other reasons for like privacy or for legal liability protection. Again, you're one step off of the ownership of the money, so you're more legally protected. Those are another reason you would want an offshore company. Or potentially to get a license for a certain type of business. If you want, I know a lot of crypto exchanges are in the Cayman Islands. So there's different reasons when you would want an offshore company, but for the majority of my clients, it's not necessary. And they have low risk business, they have low risk lifestyles, they're not getting sued by people. And it's an extra cost and an extra headache that you have to deal with compliance. So offshore companies do serve a purpose. If you need one, get one, it's great. But most of my clients don't have one or don't need one. And if they do need one, they probably still don't have one and don't care. And I've recommended it. So that's kind of that one. So that's that. Federico has another question. Once we move to Puerto Rico, Act 60, amazing. So how would that work tax-wise? Both in that PR. Have LLC in Puerto Rico, so using the mainland through Amazon. We want to make sure. Oh, I thought this was I have a lot of clients in Puerto Rico, but now I know who you guys are. Amazing. I want to hear about the NFT project. So Puerto Rico has very interesting tax incentives. I'm not a Puerto Rico tax expert, but I watched a number of videos on it. Actually, my friend Peter Paulson has an amazing video on the Puerto Rican tax laws, and I'm actually going to shout out his channel and find it. Cross the law, Puerto Rico, because I don't do this, and I want to just look at the videos here for them because I know they made a number of videos. Go to 6-month update. This is 2021. Okay, cool. This is the last one they did. Defending Act 60. So this is the Act 60 you're talking about. I would recommend watching this video. I don't know enough about it, and I would just watch, ooh, the race to the bottom. So my friend Peter is amazing. Watch the video, and you'll get, and see why Nomad Capitalist didn't move to Puerto Rico. And I also watch a lot of Dave Ramsey videos. So you need, when you're doing Act 60, you need to actually have a business in Puerto Rico, and you can take advantage of the act if you do it the right way and pay no taxes. You can also try other low tax countries. I love Panama myself. Depending on your residency, if you expatriate, you can move to Panama. I don't think people from Spain can. I think they have to go to different countries. There's a lot. I have to make a whole story of best countries, best tax haven countries to start your business, or to get residency. And I have to make a series of those videos, do a little bit of research on that. But yeah, I don't have the best answer for you. You should definitely check out Peter Paulson's video. That's for you, Federico. So I'll do you a favor. I'll just link it in the chat if you want to watch it. He's again, he's been featured on the channel a number of times. And I don't do this stuff anyway, so I want you to get the best answer. So listen, it's 8:15. We've been at this for at least an hour. I know 15 minutes of tech stuff. I answered all the questions. I really appreciate you guys being here. I know we have, I'm going to close this. We have 10 people here. I'm going to repost a lot of these answers. And I'm going to have new stuff coming on in the Discord. Comment here. Let me know if you think of any threads we should start where we can push conversations. I love crypto. I love investing. I love second residencies and all of that stuff. I love making content, answering questions, and researching. So if you think we should do any of that, let me know. I appreciate you being in this meeting today and asking me your questions. And I'm looking forward to having another productive meeting next week. I think we really did it all, guys, and I really appreciate you being here. And I'll see you. I'll see you on the next one. I got more meetings. It's already 8:30 and 8:15, and you're in France, and I'm fried. Okay, I'll see you guys later. Thank you so much.